Hello everyone, welcome to the Ashworth Wealth Weekly Market Update. My name is Todd McChesney. I'll be covering a couple quick little things today, kind of a short one this week. This chart just pretty much just shows what's going on with the gross domestic product, otherwise known as GDP. This is the GDP now chart, which shows it from a daily standpoint. Usually we look at GDP from an annual standpoint, but this is where they're kind of watching what's happening day to day. How much of it's based on consumption, how much of it's based on other contributors, etc. If you think about the goal here from the Fed, we've talked about it several times, is to try to get to this soft landing. We're trying to figure out, can we keep inflation in check enough, and can we slow the economy down slow enough to get inflation under control by raising interest rates, but at the same time not cause a recession. If you remember last year, GDP was about 4%, which is really good. They like to be between 3 and 4%. Don't want the economy growing too fast, but they want to make sure they're on top of a couple of different things. And so that's kind of what we look at and figure out what the Fed is trying to do. So this is just saying that it's growing a little bit slower than anticipated, which doesn't mean it's bad. It's just something that I want to keep an eye on. They're still projecting to be between 2.1% and 3.2% if you look at this chart on an annual basis. Retail sales were up month over month back in February, and gas prices are up, but everything else is pretty much level. So we'll kind of see how that plays going into it. Once again, the key here is try to have a soft landing. We want to see, can we get this under control? And before the Fed has to start lowering interest rates, they're going to lower interest rates to try to speed the economy up again. So that soft landing is, can we slow it down enough and then be able to increase it, slow it down enough, and then increase the speed of the rate of the economy growing by lowering interest rates. So we'll kind of see how that plays. But for right now, the nothing urgent to do other than stay broadly diversified and make sure we're on top of some things, make sure that we're positioned to be able to take advantage of any changes through rebalancing, and also make sure we have plenty of cash on hand. So if we do have a little bit of a hiccup for a period of time, the Fed generally tries to keep these under control. They're not always the best at it, we know that, but their goal is to try to keep this in check as much as possible, get that soft landing, so as inflation does tend to decline, they don't go into a recession. There are still people that think that inflation may come back. We just don't know. We'll kind of have to keep an eye on it. So in the meantime, if you have any questions, feel free to reach out to our office. Happy to chat anytime. Feel free to forward this to any friends or family members that you have. It's always posted on our YouTube channel at Ashworth Wealth. And if you have any questions, we'd love to hear from you. Thank you very much, and we will see you next time. Talk to you soon. Bye-bye.